Assalamu alaikum everyone, this is Abdullah again. This is our third lesson of our financial accounting lessons. In the last week, I couldn't make a video because of my health issues. Now, in this week, I'm recording a video and this will be about recording transactions and events. If you didn't see our last lesson, I highly recommend you to watch this lesson because our third lesson will be linked to our second lesson. Okay, we will talk about sales and purchase returns firstly, right? Sometimes we make the sales, and if the goods are not well, we will receive our sale goods that we sold, or we may return purchase, right? Typical double entry for sales will be cash or receivable on the debit side, and on the credit side it will be sales. If we return the sales, if the sales are returned, or it will be called, it is called also return inwards. It will be sales returns on the debit side and cash or receivable on the credit side, depending on the type of the sales that we made. If it was on cash, it will be cash. If it was on credit, it will be receivable. Let's talk about purchase returns. Typical double entry for purchase will be purchase on the debit side and cash or payable on the credit side. This is also about the type of the purchase that we made. Okay, what will happen if we return the purchased goods? It will be payables or cash on the debit side. It will be purchase returns or return outwards on the credit side. You see, like returns are the opposite of the typical sales or purchase double entries. And also, sales returns can be considered as expenses or contra account on sales. The same thing for purchase. Purchases are expenses, and purchase returns can be considered as contra account on purchase or expense, right? Okay, let's talk about sales tax. Sales tax is the tax charged on sales, right? In the real life, you may encounter this kind of situation in the UK, or for example, if you buy the pro or premium version on the artificial intelligence, I mean ChatGPT or Gemini, you will pay also value added tax, right? VAT. This is called sales tax. This is our sales tax account on the T account, right? On the debit side, it will be tax on purchase or input tax. On the credit side will be output tax or tax on sales, right? How would you determine what amount will be the tax, right? Why it is used? First of all, if we talk about sales tax is used for charging the tax on the last customers, and for this purpose, businesses serve as a bridge, right? For the government and also the last customer to pay the tax. This is how it works, and this is our T account, and carry it forward and brought forward. We have this kind of words. What is carry it forward? It is a balancing figure in the T account written in the lower side to balance the T account, and it will be brought forward for the next period. What is brought forward? Brought forward is opening balance of the period from previous period, right? And if our debit side is higher than the credit side, it will be revenue or contra account on liability, meaning that you will be given back additional tax which you have paid because of the purchase that you made. For example, if you buy the 100,000 goods and you make the sales on 100 sales, and you paid $20,000 additional because of the lower sales that you made. In this case, if you have been registered for the sales tax, you will be given the additional tax that you have paid for the government, right? If the debit side is lower, it will be liability. You will pay the additional, the difference for the government. And these are the double entries for sales tax. If you make the purchase, debit purchase, and debit also sales tax, and credit payable and cash. If it is sale, that it will be debit on the debit side, cash or receivable, credit side, sales or sales tax. If you see, I have highlighted receivable and payable. Why? Because on the payable and the cash, it will be the gross amount. This is theoretical question and mostly tested in the financial accounting exams or Kaplan kit or BPP kit. If you solve the questions, right? The gross amount will be written on the payable and also receivable account if you made the sales or made the purchase on sales tax, with sales tax, right? What are the gross amount and net amount? Gross amount is the amount of the purchase sales plus sales tax, or it will come as including or inclusive. These are the signal words for the gross amount in the questions. Net amount, this is the amount of the purchase or sales without sales tax. This means the keywords are excluding or exclusive. Let's do let's solve the any kind of the sums in our study text. For example, we have the illustration fifths, and there is also solution. Bas sells the following goods to Ali at a tax inclusive. This means gross amount, right? $470 less at a tax exclusive price of $700. This is the net amount. How much sales is tax collecting on behalf of the tax authority if the rate of sales tax is 17.5%. This is a solution inclusive. How you will calculate? 17.5% is divided by 117.5% and multiplied by 470. And also exclusive, gross amount and net amount, right? And therefore it is divided, the sales tax rate is divided by 100% and multiplied by sales amount. This is the total amount collected by the BAS on behalf of the government. And we have the test your understanding fifths. Let's do it together. Loria purchased goods for $174,240, including sales tax. This means here it is gross amount, right? The results gross amount, and sold goods for $230,400. The sales tax rate is 20%. How will we do that? One minute. Our sales tax on sales, right? Tax on sales. That means the amount of the sale, the tax that we collected from the customers. 1 minute. 230,400 is multiplied by 20% and divided by 120. 38,400 and tax on purchase, right? Okay, 174,240 is multiplied by 20% and divided by 120. And this is credit side, this is debit side, right? And credit side less debit side equals to 900, yes, 9,360. This means we have the liability of 9,360 payable. Yeah, and the answer is A. And let's continue our lesson. Okay, accounting for discounts. There are two types of discounts: trade discount and settlement discount. Okay, what is trade discount? If you are an Uzbek person and know Korzinka Uz, there will be discounts. Like if you buy our one product and next one will be added for your purchase. That means this is also trade discount, right? Or in most supermarkets, if you buy any kind of the product, you will receive you will be added also another product. Or in the cafes, you may encounter this kind of situation. If you buy two fast food and another one will be added to your purchase for free. Why it is used? To attract more sales and also turn the inventory faster by making it empty. This is used for avoiding the inventory to be perishable, and this is also expense and also abnormal loss. We will talk about it later, right? For example, let's imagine we are making the sales of $1,000 and the trade discount is 10%, right? And also in this it is also another theoretical part. Net amount is recorded. This means we will reduce 10% discount in our double entry. You see, that's it. There is no more thing in trade discount. And we have the settlement discounts, or its other names are cash discount, early settlement discount, prompt payment discount. Here is gross amount is recorded. Gross amount. Why it is used? To attract more sales on cash and also reduce the probability of irrecoverable debts. We will talk about irrecoverable debts in our next lessons, right? We have the two perspectives: seller perspective and buyer perspective. Let's imagine you are a seller and you are selling $1,000 of goods, and you will promise that if your buyer makes the payment within 15 days, you will give discount of 5%. This is settlement discount, right? You are assuming that customer is expected to pay within 15 days. How will you do that? Because in the past habits show that customer can pay and always take an advantage of the discount. In this case, you will write debit on the receivables on the debit side 950, sales also will be 950. If the payment is made within 15 days, it will be cash on debit 950, receivables on debit 950. You will see you are crediting the receivables, you are reducing the receivables to nil, which you have written before the sale in your assumption, right? What happens if the customer didn't take the discount? In this case, if the payment is made after 15 days, you will receive the cash of $1,000 because discount is not taken, and also you have written the receivables by 950. In this case, you are making more sales by 50%. You will increase your sales. And another situation, customer is not expected to take a discount. In this case, it will be $1,000 on the receivable side, and credit side also $1,000, because you are expecting that customer is not able to take a discount. If the customer pays after 15 days, there is no problem. The double entry will be the same. But what happens if the customer pays within 15 days by taking the advantage of the discount? In this case, you will receive $950, right? Yeah. And you have the written 1,000 receivables. You will reduce the receivables to nil by $1,000. In this case, you are making lower sales, and you will reduce your sales by also 50% difference, I mean, right? If it is understandable, we will go through with buyer perspective. You are making $1,000 purchase and settlement discount is 5%. If the payment made within 15 days, that will be $1,000 purchase on the debit side. You are paying by cash 950, and you will receive discount by 50%. There is no problem. And what happens if you pay after 15 days, right? It will be debit purchase $1,000 and credit sales will be also $1,000. No problem. Let's do some questions on our study text. One minute. Okay. Accounting for sales tax, we have said, and discounts, yes. On trade discounts, we have no any kind of problem. A seller perspective and buyer perspective. We have test your understanding 10. And Georgia owes a supplier Razan $2,000. Razan has offered Georgia at cash discount of 3% for payment within 10 days. What ledger entries are required to record the payment by Georgia to Razan? By Georgia, right? Along with the calculation of the net cost of the goods purchased. Georgia took advantage of the early settlement discount offered by Razan and made payment within 10 days. Okay. A will be buyer taking the discount, right? Debit purchase will be $2,000. Credit cash will be, 1 minute, I need to calculate. Okay, $1,000 and 940, and on the credit side will be also discount received by $60. What about B? What accounting entries are required by Georgie to record the receipt from Uli? Georgie is owed 3,400 by a customer Uli. Georgie offers a cash discount to all customers of 2.5% if they pay within 14 days. Uli was expected to take advantage of the early settlement discount offered. Therefore, the sales invoice raised by Georgie was prepared on that basis. Okay. We are expecting that the customer will make the payment within 14 days. That's why we will write debit receivables, credit sales by how much amount? Now we will calculate $3,315. $3,315, right? No problem. However, Uli did not pay within 40 days and paid the full amount due after 30 days. What happens in this case? When the payment made, we are receiving cash of 3,400, and credit receivables we need to reduce $3,315, and also credit side will be sales by $85. And sometimes this kind of questions may come. Seller is offering 10% discount on all sales, and also if the customer pays within 14 days, another 5% of the discount will be offered. Sales are $1,000. Sales visit rate discount will be 1,000 is multiplied by 0.9. This will be 90%, $900. Sales after settlement discount will be it will be calculated after the sales from the net amount of the sales after the trade discount, reducing by the sales by 10%. We will calculate our settlement discount. And this is our third lesson. Take care. And sometimes this kind of questions may come. Seller is offering 10% discount on all sales, and also if the customer pays within 14 days, another 5% of the discount will be offered. Sales are $1,000. Sales visit rate discount will be 1,000 is multiplied by 0.9. This will be 90%, $900. Sales after settlement discount will be it will be calculated after the sales from the net amount of the sales after the trade discount, reducing by the sales by 10%. We will calculate our settlement discount. And this is our third lesson. Take care.